Good day, everybody. We are looking at an A+ setup where the volume profile shifted to the lows. We are only 8 minutes left to New York Open. I entered 5 micro contracts. I'm going to target the London high, $175. In terms of price action, we have a chain of bearish candles in here with equal lows. That equal lows is fragile. I have to admit that. The price closed above half. 994 contracts, micro contracts have been executed around $30,019. The market will start in 7 minutes. Let's see how this trade will go. The stop is taken. I can re-enter that position again. Let's enter a trade. Last trade was with 5 micro contracts. Now this one is 10 micro contracts. Stop is at 996. Reward is at $175. This trade is solely based on the point of control. If I get the second order filled, I might exit one above this high, but I'm positive with this volume that came into the market, it can at least target the London high. Now I have 10 micro contracts. Let's get out 5 at $30,123. What I did was I simply measured the volume from this pivot high to the current price, gave me a ton of order presenting themselves in here. I got in on first trade. I hit the stop. 3 minutes to market open. Here's our trading journal on the right hand side. Today we had 5 trades up by $133, about to open in 2 minutes. Now we have 2 sets of bearish candles. I added 5 more contracts to my buy order, risking $837. TP goes all the way up to London high. This should be a good trade. I expect a massive bullish run with high volatility based on this massive volume that has been seen at the lows or in the discount. Price action wise, we already closed above this bearish candle. That's a market structure shift. If I see a ton of speed, I might only exit another 5 micro in here. This trade might make my month. See if I can add more. I don't have more margin. I cannot add more to my position. I want to add 5 more contracts, micro contracts on this tail. There is a speed. I want to exit only another 5 here at the London high. The first partial is taken. Now I can safely remove my stop to break even. The buying aggression is in the market. The price is above 123. The volatility did not decrease. I have the value area high here at 76 to support my position. Stop to break even. Waiting for the price to take the London high. And after that, it might have a pullback. So I will be monitoring the price after it hit that area. We must allow our trades to breathe and don't close our trades when they are in profit. That's a very key into trading psychology, because once our profit is a much more and bigger than our losses, we can expect having green statement all the time. I like this tail. Buyers have stepped in. London high is not far away. This is 500% return of the risk. The risk to reward is 125. Actually, it's 535% return if it takes the London high. Let's set our TP slightly higher because NASDAQ is overextended, and after it takes these highs, it might start consolidating. The last trade I set for a $2,000 profit. Let's extend the volume till I don't see a big volume coming at the highs. I won't be worried about my trade. Once I see this area or the premium area volume is getting thick, then I might manage my position and exit a bit earlier. There you go. The final target is taken. Let's take a look at our statement. All right, today what do we have? We had a few trades during the London session. Totally 8 trades, $4,600 returned. The London session trades are also available in this trading course. I hope you guys like this episode. Until next one, stay safe, stay observant, and always protect your capital with stop loss.